Hello and welcome. You tune into Buy Now Sell Now with me, Ankita Saxena, and with me as always is Kanishka Sarkar. In the next 1 hour, we'll get all your questions answered. Keep sending in your stock-related queries, your buying price, your holding period, and your question, and we'll get them answered by our experts. But first up, we'll take stock of how the market is really shaping up at this juncture. Kanishka, another day of a very muted, market, tepid market seeing at this moment. We are very, very range bound. There's no direction that we have really picked up because the tariffs are weighing on us. We are also underway heavy earnings season.
That's right. Another day of of consolidation of sorts is what we are seeing at this point. The Nifty that continues to trade in the red with a downtick of 0.2% at this point, trading around that 25,150 level, 160 level. We have given up that 25,200 level that we crossed yesterday. On the Sensex, we are seeing a similar downturn coming in. A 0.2% downtick is what we are seeing, trading near that 82,450 levels. India Wix, that continues to trade above that 0.8% level. On the other hand, we have Nifty Bank, which is also seeing similar cuts coming in, trading near that 56,000 and 57,000 levels, odd levels is what we are seeing over there. If we take a look at all the top contributors that are still limiting the downside, it is Tata Consumer, Trent, another Tata Group name. On the other hand, we have SBI, which has launched its largest QIP. Next up, we have two Tata names, Tata Motors and Titan, which are holding on to gains. On the other hand, we have Tech Mahindra, which reported its earnings yesterday, and a modest set of numbers is what we have seen, trading with cuts of 1.6% as we speak. On the other hand, we have Inden Bank, which continues to trade in the red with a downtick of 1.3% at this point. On the other hand, another IT name, Infosys, continues to trade in the red alongside the rest of the IT names. Also contributing to the downside, SBI Life, Eternal, ICICI Bank among the top laggards this morning. On the other hand, let's also look at, take a look at some of the stocks that are in focus on the back of news flow. First up, real estate names are doing the rounds today. First, there's DLF, which is going to launch its first Mumbai Andheri suburb on July 17th. Its first phase of the West Park project that will continue, that will include over 400 apartments. Other than that, there's Godrej Properties, which has acquired 50 acres of land in Raipur. Other real estate names also are buzzing on the side with Sobha and Prestige seeing gains. On the other side, we have ABB Global, which actually reported its results shortly just a while back, and ABB India, that continues to be in focus because of that. While the India commentary, that continues to look bleak, 9% of downtick is what we have seen when it comes to India orders for ABB Global. However, it looks like the street was probably expecting an even worse result, but it's performed better than expectation, and hence the stock has recovered at this point. So that's how the market is looking like right now. Ankita?
Absolutely. So nothing much happening there on the market. Another day of correction that's coming in. Very range-bound trade coming in. But let me get on board our guest, Sharmila Joshi, who's joining us at this point, and Sharan Lilani, who's the market expert on the technicals. Thank you so much. Good morning to both of you. Thank you so much for joining us. Before we get started with all the queries, Sharmila, let me come to you. What are you making of the markets at this juncture? We are very, very range bound. There's no direction that we are picking up. We are underway the earnings season. Firstly, what are your expectations from the earnings? Because that could be the next trigger for the market, right? Because the tariff news has been going on and it's still playing out. But earnings are very important to watch out from an Indian market standpoint. So how do you see that panning out?
So, I completely agree that I feel that markets are sort of going to stay, very hard to predict and sort of directionless almost for the near bit. Simply because I think the concerns of tariff are going to weigh down on us, because, that will be an important sort of development whenever it finally takes shape, because, we've been talking about it we had 90 days that got over on July 9th, and now it's been extended till August. And it's not easy for really for governments to cut deals in 90 days and come to agreement. So that timeline always looks ambitious. And I think that as time goes by, it's even when like the Indian government says they're moving fast, you do realize that these things are going to take time. But that will always play at the back of your mind, because there will be statements back and forth. So that's always going to be a factor. And completely, I think that therefore the focus should totally be that if you buy anything now, it should be with a 3 to 5 year perspective, more than ever, because that's when you would expect things to like finally settle down and market to react on the basis of their earnings and their individual stock performance. And again, when it comes to sectors, we are going to, irrespective of what the numbers say, that cloud is going to hang over all the export-facing sectors and IT. And IT is not off to a very great start. The numbers are fairly muted, commentary is muted. So that's the expectation from the earnings season. And I think you should expect to see some kind of a pickup in the consumption needs. So that would be my broader sort of expectation, given the fact that we are entering a sort of a normal monsoon, and we have seen a little bit of that recovery come into consumption. So maybe that will carry forth, given everything, all the developments we had in the budget, etc. So let's wait and see how the earnings season plays out. But irrespective of that, I think you will have to keep revisiting global news and specifically tariff news.
All right, so consumption is one of the spaces that we will be tracking. But moving on, let's get started with all the queries that our viewers have sent to us. Let's start with Deep, who has sent us a query from Dubai. He has 1,000 shares of Infosys. He's been holding them since January 2022 with a buy price of 1,800 rupees. Sharon, he wants to know whether he should exit and reinvest somewhere else or continue to hold.
So definitely IT sector has been under pressure recently post TCS results, but Infosys is still holding strong. I would suggest to keep a strict stop loss in the system of around 1540 on a daily closing basis. If it closes below that, do take a stop loss and move to stronger sectors like the PSU bank, even FMCGs. Autos are also doing good. Pharma has given a breakout. So you have a lot of sectors to look that are making higher highs in the recent time, and I expect it to move ahead also and give good decent returns short to medium terms. So hold with a stop loss of 1540 on a daily closing basis. If it hits, please exit and look for other sectors.
All right, so that's the view coming in on Infosys and on the IT pack, because the next question is also from there. Sharon, this is Nikhil who's writing in from Mumbai. He's an intraday trader and he wants to know your short-term view. He has 35 shares of Zensar Tech at a buying price of 862 rupees with a target price that he's predicted for 965. Is this the right time to exit the stock or better to hold on to it? Now, obviously, he's predicted a target price of 965. Do you think firstly that will touch those levels? And at this juncture, what do you see? Should he be exiting this stock or can he hold it for these levels?
So for him, I would suggest, the results are due soon on 22nd of July. So I would suggest please keep a strict stop loss of around 800 rupees on a daily closing basis. And in terms of targets, I cannot see such big targets coming. The stock has a strong resistance of around 880 odd levels. Assuming even if the results come good, you can see some upside till 880, where the stock can consolidate and actually even reverse. So please do keep a stop loss in the system of 800. If it closes below that at any point in a daily closing basis, do exit. Maximum resistance is around 880. Since your buying price is a little higher, I would suggest be very careful. Results are due on 22nd July.
Okay, so that's the view on Zensar Tech. Keep an eye on the results. But Sharmila, now coming to you, we have a query about the defense sector. We have Satya Veni, who's written to us from Visakhapatnam. He's a long-term investor, wants to invest 4 lakh rupees for a period of 18 months. Wants to know if there are any two good picks you could suggest in the defense sector and the entry price for those two.
So I think the entry price is the tricky question, but the two stocks sort of that I do like within, one is BEL. I think that is sort of, it's done well and it's corrected, and again it's sort of gone up. I think the key thing to remember in defense stocks is that all these have very good order books, but all these orders are long gestation orders. And for them to sort of show impact in your on your profits will take time. So just based on what the company is doing currently, I like Mazgaon Dock and Bharat Electronics. Mazgaon Dock, again, the order book is very strong, and I think shipbuilding is going to be sort of like the next focus area for the army. And we are already seeing a lot of there is always already talk of a lot of orders in the pipeline, etc., for this as a sector. So whether it is Garden Reach, Mansgaard Dock, one stock should be in your portfolio. And clearly, as you rightly thought, the minimum holding period should be 18 months to, I would even say, 24 months. So give it about 2 years.
All right, so two counters, Garden Reach and BEL, but from the defense pack. But with that, it's time for a quick breather. Don't go anywhere. We're getting your questions answered on the other side of this break, so keep sending them in. Let's take a short break. Welcome back. You're tuned into Buy Now Sell Now, where we're getting all the stock-related questions answered. But before we get going with all the questions, remember the number is flashing on top of your screen, so you can keep sending in your queries and we'll be getting them answered by our experts. But before that, let's talk about the primary market action, the listing of a new kid on the block, and that's Smartworks co-working spaces. Now, we had the management on our show as well, but now the company has listed on the bourses, and it is listed at a premium of 7% over the issue price of 407 rupees per share. Let me get on board Sharan. Get you on board, Sharan. Talk to us about this entire space. Now, we have seen this listing. It's been a decent listing for this company. But this space is very buzzing. This entire industry, whether it is backed by startups or hybrid models, what are the levers of growth going ahead for this industry? And in general, about this industry, what is your opinion?
So Ankita, the space looks excellent, and it's actually a Kodak moment for the single leasing companies. The shift is clearly seen from single leases to a co-working space where they provide you with a creche, entertainment, good canteen, good features, everything is included. So if you see just the Q1 number, clearly 21 million square feet of transactions. Of the total transaction, I think 26% of all the leasing deals were done by co-working space driven by your GCC, startups, hybrid models. Now, if you see the actual occupancy, it's almost reaching at 85%. So it clearly is very under penetrated and supply constrained market. So you'll see a lot of growth coming in. So I am very positive on the industry overall.
Right, but Sharan, you are very positive on the industry, but within this industry, there are a couple of other players as well. Is there any other player that has really caught your eye or that we need to watch out for, given that there are multiple levers of growth within this industry? Any other name that's looking attractive to you?
So yes, Ankita, there are mostly now 3 players in the industry. 2 just recently got listed. One is an old company, EFC Limited. Again, a Pune-based company, has expanded quite a bit in the last 3 years in the leasing space, especially in the co-working space. Now, the company plans to double its capacity by FY28. Again, great revenue visibility, adding 20,000 seats every year in FY26, 27, 28. They have one more segment of furniture fit outs and even furniture, that the main cost of a co-working space is actually fitting out and deploying the furniture. So again, the company already has this and actually doing a backward integration. So that will be margin, it will actually increase the EBITDA margins going ahead in the next 3 years. So on back of these two, again, fundamentals are looking very good, industry is very low. And now on technical front, I would suggest a strategy of a buy on dip strategy. You can accumulate around 330 to 310. Do keep a stop loss of around 290 on a daily closing basis. Targets can be around 370 to 410. There's a decent resistance zone of around 355 to 360, and it has been hitting for the last, I think, 6 months around about, and I think it's ready for a breakout of about 360 odd levels. Again, it's trading above all its moving averages, has seen excellent accumulation, positive accumulation in the last 3 months, and a breakout about 360 can give you excellent returns in the short to medium term. Even on a long term, I really like this space. The whole industry is doing well, and I think a few more players can get listed in the next 2 to 3 months. So overall, a buy on this company from my side.
All right, a buy call coming in on EFCI, which is within the space of, within this co-working space that is a burgeoning industry, given that it's getting a major fillip from all the startups, whether it is hybrid models and so on. But let's move on and get started with all your questions you have been sending us on our phone line. Let's get started with all the queries then. The next question is coming in from Murtaza from Mumbai. Now, Murtaza is asking about IDFC First Bank. He has 1,000 shares that he's bought at a buying price of 93 rupees. He's been holding it for the last 2 years, and he wants to know if he can hold it for 1 more year He wants to know whether it's a good company to be held for the next 1 year, or should he be exiting at these levels? Sharmila, let me come to you on IDFC first.
That I like and a sector that I like. So definitely, I think continue to hold. I think my only concern is that every time we see the stock getting to an 85-90 level, there either some bad news or there is some selling that comes in from a large seller. Not like not the sort of trading kind of selling, but selling from a large seller. So I think just be cautious of that. But I think for now at this level, the valuations do look a little expensive. But where the bank is and what their plans are, I think you can continue to hold. With a sort of an 85 rupee target in your mind with an 18 to 24 month horizon.
Okay, so those are the levels to keep in mind for IDFC First Bank. But moving on, Ganpati has written to us from Chennai. Sharan, this query is for you. They have 360 shares of Mahindra Finance at a price of 273 rupees and IRCTC 100 shares at a price of 778 rupees. What's your suggestion for the short term? They wish to hold these stocks for about 3 months.
So M&M Finance over a very long period, I think since November, hasn't done anything. It's just consolidating and trading below its moving average, while L&T Finance has touched all-time high, AB Capital all-time high, Shriram Finance all-time high. So looking at the chart, I don't see a good upside coming in anytime soon. And if possible, actually you can just exit this stock and get into some PSU or a slightly undervalued finance company like a Shriram Finance, and even the newly listed HDB Finance. I think over a short period, they will give better results. Currently looking at the chart, nothing is there, sideways consolidation. So I would suggest an exit and a shift strategy. Which was the next stock? Sorry, which was the next stock?
IRCTC. IRCTC.
So IRCTC in a short term has making higher lows. Again, just trading above below the 200-day EMA. A breakout above 790 could actually confirm a trend change. So currently nothing to it. You can hold on to it. Do keep a stop loss in the system of 445. If it any day closes below 445, do exit the stock. But currently it's looking decent, and I think you can get a good 5 to 10% kind of upside.
All right, so that's the view coming in on IRCTC and Mahindra Finance. But let's move on to the next question. This is Ignatius who's writing in from Kolkata. He says he has 1 lakh rupees to invest. He wants a view on which stock should he be going for. Sharmila, do you have any suggestions for Ignatius to invest 1 lakh rupees?
So this is a slightly open-ended question because you don't know what the existing portfolio is and what the breakup is, etc. So this is a very generic answer. I think as I said right at the start when you asked me the way I would position myself if I had 1 lakh rupees is that I would try to buy into a sector which I think will do well in this next year. And for me, that is anything related to consumption. So it could be consumption that is a direct FMCG play, or it could be a consumption in the terms of an Amber Enterprise or a Blue Star, white goods sort of a space, or even a Trent or anything which is of course West Side and Studio. So anything like that, Tata Consumer, that could be another place. So you could look at a whole, some 3 or 4 stocks within that space and maybe make a basket and put like 20,000-30,000 in each and see how that plays out for you over the next year or so.
All right, so those are some of the consumer names that you could track. But Sharmila, what's your view on Bharti Airtel? Our viewer, they haven't given us their name. They want to know what's a good entry point for Bharti Airtel. They want to stay invested in the stock for about 12 to 18 months.
So, the stock has gone to, I think it's all-time high. So maybe entry level, you should check a technical level. But let me just say that it's a sector that I like. And within that sector, in a sense, we have only, we have Vodafone, we have Bharti Airtel, and we have Reliance, which is, meaning it's not a separate company yet, but that would be the third sort of big telecom player that we have. Just based on how much we are using our phones and what we are using them for, and where the pricing is, where it could go to, and that we will use more and more data on our phones. Everything points to this being a great sector to be invested in. So I would really leave entry levels to a technical. I mean, it's already gone up so much. I remember seeing this. I've been tracking this stock, I think, since it was 300 rupees. So it would be, I hold the stock also. So it's ridiculous for me to say what's a good level. I mean, I can't even think of it. So get a technical level, but it's a great sector to be a part of.
A great sector to be in, and you're personally invested in Bharti Airtel. But let's move on to the next question. Now, again, we don't have the name of the person who's given it. Requesting all the viewers to please write in your name with your questions so that we can attribute those questions to you. But we will still take this question because it's an important question to understand investing. Sharmila, I want you to take this question. So this person writes that they have 2 lakh rupees to invest. Do I put the entire lot in one stock or diversify 50,000 in 4 different stocks? My holding period is for the next 3 to 4 years. Which sectors should he look at for the next 3 to 4 years? Now, this is important to understand because for all the viewers, he's asking if he should be putting all his eggs in one basket or perhaps diversify his portfolio. Kindly shed some light on that.
So I always think it's a good idea to diversify because there is a big argument on whether you should have a concentrated portfolio or you should have a diversified portfolio. When you go for a concentrated portfolio, you're simply undertaking more risk because then you're definitely, it's like if that stock works for you, if it gives the kind of returns you're thinking of, then you will do much better than being in a diversified portfolio. But if you are in if that stock doesn't do well, then your exposure would be that much less. Also, I think you also need to address this from the larger perspective of what your overall portfolio size is. If your overall portfolio size is fairly large and 2 lakh rupees in a single stock is not going to make a dent, in comparison to what your portfolio is, then it might just make sense to put all that into one stock because you are already diversified because your portfolio is large enough. But again, my advice would be to whatever stock you select, try and buy it on dips and do like a staggered SIP buying even in the direct stock that you're doing because it simply works better as a strategy for me. Whether you're averaging up or down, it just works better. So if you were to look at a diversified sort of a portfolio, then I think the 3-4 main sectors that I would look at is, one, I think I've spoken of consumption. Another would be a stock from the banking name, because I think that from where we are as an economy, financials and banking have a very large role to play. Within the consumption space, maybe sort of as this, you could also look at real estate, especially stocks which are focused towards second-tier towns, that kind of real estate, because I think that's where the growth would come. So again, you could look at maybe a housing finance stock. So that's like a bridge between financials and real estate. So, you could look at a play like that. I think another important sector for us is pharma. So that should definitely, you should find a name from pharma within your portfolio. So again, when you're talking of pharma, maybe you could look at companies, the pathology, the testing lab kind of companies, or an hospital company, anything that has that exposure. So I leave it to you, but these would be broadly the 4-5 sectors that I would look at.
Okay, so that's the view. Diversification continues to be a great strategy, and select segments in consumption, BFSI and pharma are some of the names where you could look at. But moving on, Sharan, now coming to you, we have a question from Subrata Mukherjee from Kolkata. He has shares of Coal India at a price of 390 rupees. He's asking if you can suggest a long-term target. They haven't given us a time frame, but a long-term target is what they want.
For a long term, I would not be able to comment. So I give short to medium term targets. But if breakout comes above 400, you can see targets of 450. In the longer term, I don't see much happening. Looking at the chart, actually, it's quite negative. Trend is towards the downtrend. It's again trading below all its moving average. The only positive is it gives decently good dividends. So for a longer term, I would not comment, but in a breakout can be seen about 400 for targets of 450. But I would suggest do keep a stop loss in the system of around 350. If it closes anytime below 350, do exit the stock.
All right. That's the view on Coal India, but let's move on to the next question. This is Dr. Zeenat, who's writing in from Ranchi. She says she has 1,153 shares of NBCC, which she's bought at a buying price of 103 rupees, and 220 shares of RITES at a buying price of 277. Now, she wants to know if she should stay invested or switch it for other stocks. She wants to know, are these good stocks to stay invested in, RITES and NBCC? Sharmila, or should she be switching to other counters?
So both are fairly sort of decent stocks, may not be my top picks within the sector, but I think since you already have them and given the price and valuation that they are at, I think to my mind makes sense to hold on to both. This is, I think, a sector that you will see sort of spending coming in over hopefully the next year or so, and both should benefit from that. So I think for me, both RITES and NBCC will be a hold.
Okay, so that's the call on NBCC, a whole call coming in. But moving on, a viewer again. This is Swati here. She's a long-term investor. Sharmila, she wants your view on iRadar. She has 500 shares at a price of 172. She wants to know whether she should continue to hold for the long term or sell.
So I think, this was a stock that when we had a lot of news flow on this, we saw it go to great levels, and then it corrected with the rest of the pack. But I think, that at current valuations, if you're patient, I think you should stay put, because now the valuations are reasonable. I do think that the stock may maybe correct a tad bit from here, but now I think the worst is in the price. And I would look at levels of around 185 on the stock. So keeping that in mind, I think for me, the stock is a good.
All right, a hold call coming in on IRIDA, but let's move on to the next counter. And this one's coming from the metal pack. And this is Rajesh Gupta who's writing in from Delhi. He wants to invest in the metal stocks, and he's identified Hindustan Copper and Hindustan Zinc as the silver prices are hitting record high levels. Sharon, let me come to you for this one. From the metal pack, Hindustan Copper, Hindustan Zinc, are these good plays? He's identified two stocks, or if not, then what would be your suggestion?
So Ankita, definitely if you compare both, I would suggest go for Hindustan Copper, even on fundamental terms. Whenever markets open and after the tariff deal, copper will see a good price movement on the upside, and this stock will obviously react to it. So if you want to compare these stocks, I would always suggest go for Hindustan Copper. It is an industrial product, copper, and its uses also are very important for all industries. So stick to Hindustan Copper. You can accumulate at current rate. Actually, the stock is looking very nice at current prices. Immediate targets can be around 285 to 310. And even if you have a position, I would suggest on hold on Hindustan Copper.
Okay, so a whole call coming for Hindustan Copper. So the next question is from Krish, who is writing to us about L&T. He has 100 shares at a price of 3,640 rupees. He's been holding them since January 2024. He wants to know whether he should continue to hold for the long term or shift to any other mid-cap stock. Sharmila?
Well, I would really hold on to Larsen. I think that given the fact that the stock has sort of corrected and it's at the valuation that it's at, and as I mentioned a little while earlier, I do think that this space will, capital goods space will, and infra space will see sort of more orders coming in hopefully over the next 7-8 months. And given Larsen's track record, as well as they that way in that sense are not limited to the Indian sort of order book, but they have order books, they have orders from all over. From different countries, continents, etc. So given that, as well as the current valuation of the stock, I think from a longer term perspective, this would be a sort of a preferred portfolio stock for me over a lot of the other mid caps.
So that's the view coming in on L&T, but let's move on to the next counter then. This is Satyaveni who's writing in. He wants to know your view on CAMS and CDSL. What are the entry levels, Sharon? CAMS and CDSL, I mean, a lot of people have been asking us about the capital market theme. He's picked out CAMS and CDSL, good levels to enter?
So definitely both stocks fundamental also are looking very nice. I would pick CAMS over CDSL looking at the chart. I think it's on a verge of a breakout. So actually you can enter at current levels and even add towards 4,000 odd level. So do a strategic investment like a 30% kind of investment. Again, the stock is on a verge of a breakout. If it starts closing above 4,350, you can quickly see levels of 4,500 to 4,700. And CDSL, if compared to CAMS, is slightly weaker but has seen good recovery. What is happening in the market towards BSE and MCX doesn't impact them too much. So I think in the longer term play, you will definitely make money. Even CDSL, again, you can do a similar strategy, average around, you can buy at current levels and even average till 1,500 odd levels. a breakout can be seen around 1800 odd levels for all-time high. So both stocks are very good for and the longer term view for these sector is very good, especially CDSL and CAMS.
Okay, so that's the view on CDSL and CAMS. That's how you could play the capital markets theme. But on that note, we'll take a very short break and our experts will answer more of your queries on the other side of this break. Now you're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we are answering all your stock-specific queries. So let's get back then. Now we have the next query coming from Seshama, who's been holding ViPRO shares since 2021 at a price of 509 rupees. She wants to know whether she should sell at this point at the current levels and also if it's the right time to buy HUL. Sharan, you want to take this one?
The whole IT pack again is going through a lot of pressure. I think ViPRO results are, I think, today only. So after today, I think we can make a better view on where the stock is headed. But again, don't expect a lot in terms of growth. So everyone has said they'll grow maximum at 6 to 7 odd %, maybe a % here and there. So I think if you want to recover your money, I think because you have entered around 590, I couldn't hear the levels. So that's quite high compared to the current price. It's almost 50% or 40% kind of decline. So I would suggest stick to high growth sectors or sectors that are going to do well in the near future. And so you can recover some kind of your losses. I think PSU banks, banking, and even in fact auto sectors are looking nice. So they can grow around 10 to 15%. And a lot of mid caps also in new segments such as co-working space and other spaces are looking good for a good 20-25% kind of growth. So do we'll again review this stock post results today. Currently, I would suggest do keep a strict stop loss in the system of 250 on a daily closing basis.
All right, so that's the view coming in on ViPRO shares. But let's move on to the next counter. This is Krish who's writing in. He wants to know he's holding L&T 100 shares at a buying price of 3,640 rupees since January 2024. He wants to know if he should be holding on to L&T or should he be shifting to another quality stock from the mid-cap space. Shaina, why don't you take this question? I think
Is that for me?
Yes.
Yeah, so I think I just answered this, and I think for me, Larsen is a hold.
All right, so we've already taken this query for L&T. I guess they've sent this question again. Let's move on to the next question. This is Mecca who's writing in from UAE. She says that she has Bajaj Consumer. She's holding it she at a buying price of 227 rupees. Coal India at an average price of 443. Is it a good time to average in or any other suggestion? Should she be moving out to a better stock or should she be averaging in these names? Sharan.
So again, consumer pack is doing pretty well, Ankita. So I would suggest please stick on to Bajaj Consumer. The stock is looking very nice, has seen a lot of accumulation in the last 45 days and quite a bit accumulation, strong volume. So I think the stock can reach its previous swing high of around 280, 290 odd levels. And if possible, I would suggest please exit Coal India and add on to a Bajaj Consumer or a Tata Consumer. So you'll get better results here. Coal India, I don't see much happening. Unless you are invested for dividends, stick to it. Otherwise, please shift to a Bajaj Consumer or some other faster growing moving stock. You'll get better returns here.
Okay. All right, then that's a view on Bajaj Consumer and Coal India. But moving on, we have a query on ABB India. In fact, ABB Global just reported its results and India commentary hasn't been very great, but still the stock has been doing well. So this viewer, Ignatius, she wants to know, she has 5 stocks of ABB at a price of 6,497 rupees. She can hold for the long term, say about for 2 years, but she wants to know whether or not she should add more. Sharan, if you could suggest if current levels are good to add or at what levels she should be adding more.
So ABB in the last 2 weeks has seen significant selling, but despite that, it's not broken its previous swing low. So the higher high, higher low trend continues. And I think ABB International gave a good commentary, and people were expecting quite a negative commentary, but it was still decent compared to what people were expecting. And that is why you saw a quick reaction in the stock also. So more or less, if the stock consolidates at this price, I think more or less an immediate or a short-term bottom can be seen. So if you want to average, I would suggest let it close below above the 50-day moving average. And once it does, you can do review and actually average at that point of time. Once the capex cycle picks up, you'll see a good moment in ABB and actually all capital goods stocks. They are a little under pressure, but I think the trend will change in the next 2 to 3 months.
All right, that's the view on ABB India. As Sharon mentioned, ABB Global has given a decent commentary, better than what we were expecting, and then therefore the stock reaction on ABB. But let's move on to the next content. This is on Ashok Leyland. This is Balan who's writing in. He wants to know that is Ashok Leyland a good buy ex bonus for the period of next 1 year? Shaina, what's your view on Ashok Leyland for the next 1 year?
My name is Sharmila, not Shaina. Yes, I think Ashok Leyland is a good stock. This is ex-bonus at the moment. And the reason I like Ashok Leyland is the fact that I'm fairly positive on their product lineup, as well as their EV bus initiative. I think from a city perspective, metro perspective, I think we are seeing a lot of shift to electric buses for public transport and for general delivery purposes. And I think that's a trend that we are going to see pick up and continue. And they have a great lineup of buses there. And overall, I think the way they have worked on their balance sheet over the last couple of years has made this an attractive stock for me. At the moment, it is ex-bonus, but I think if you that should take about 2-3 months to settle down once the bonus shares get listed. So maybe give that a bit of time, give it a bit of a month or so, and then I think make an entry into Ashok Leyland with a year's perspective. But overall, it's a stock that I like.
Okay, so that's the view on Ashok Leyland. But Sharan, now coming to you, what's your view on RIS India? We had seen a stellar result in Q1, but are these good levels to enter?
So definitely, again, the stock is very strong. Has seen good movements. Almost, I think, made a new all-time high, but corrected from that level, and that always happens. Nothing new. I think you can actually accumulate, do a buy on dip strategy till 330 odd levels. So between 350 and 330, you can add on to your stock. I think in the near future, given the outlook and the commentary, I think it's ready for a new all-time high. Even levels of 400 and 450 cannot be ruled out. So again, a very positive price action, price structure, trading above all its moving average. Do a buy on dips between 350 to 330 with targets of 400 and 450. But definitely do put a stop loss of around 300 on a daily closing basis.
All right, buy on dips coming in on as far as RIS India is concerned. But let's move on to the next counter. This is Venkat Ramani, who's writing in from Bangalore. He holds a Tata Steel 200 shares at a buying price of 155 per share. He wants to know if he should be buying more or holding it on for the next period of next 15 months. Sharon, Tata Steel for the next 15 months, is it a hold call from your side, or can he add more to his portfolio, Tata Steel?
So Ankita, given the tariff situation, I think the whole metal pack is quite volatile. I would suggest a hold currently because the price action is still decent, making higher high, higher lows. Again, trading above all its moving averages, taking good support around the 50-day EMA. So I would suggest a hold. Once this whole tariff announcement from the 1st of August gets through, or whatever happens, we get tariffed or we get a deal, I don't know. Post that, I think you can look at the whole metal pack. But till then, hold on to your stock. But do keep a stop loss of around 150. That's the 200-day EMA. Again, do trade with a stop loss if you're short term, long term, or any kind of term. So if it closes below 150 on a daily closing basis, do exit and we can review it later on.
All right, so that's the view on Tata Steel. But Sharan, another question for you. It's on AB Capital. You were just talking about it a while back. So this viewer, Mahesh, who's a senior citizen from Delhi, he's been holding 500 shares of AB Capital, bought at a price of 205. At the current levels, should they hold or exit?
Definitely, you can hold on to the stock. Despite Nifty being quite negative, the stock is holding quite strong, consolidating in a very short range, and I think once the market recovers, I think this is about to break out and make a new all-time high. The sector is excellent. You had rate cuts, you had a CRR cut, again tax cut, all will benefit all these financial companies. Do hold on to the stock. I think new all-time high I can see in the near future. In terms of target, you can see targets of around 300 to 320 in the medium to short term kind of range. I do hold on. It's a hold from my side.
Call coming in for AB Capital in that case. Let's move on to the next question. This is Tarun who's writing in. On Inden Bank, he's invested 10 lakh rupees at a buying price of 1057 and 5 lakhs at a buying price of 702 rupees. For the long term, he wants to know your view on Inden Bank. Sharmila, let me come to you for this one. What would be your view for banks? Banks in general, it has been a common consensus. You like the financial space. Within that, what's your view on Inden Bank?
So, we all know and we've read about the concerns that there have been about Inden Bank and the reason the stock has corrected. Now we can argue and say that perhaps the worst is now in the price and everything is factored in, etc. But having said all that, there is still always going to be a question mark, and I think 10 lakh rupees is a sizable amount of money that you have put in. So I think definitely don't add more for sure. I think we will see a slow recovery in this stock. The valuations still seem a little high, so maybe you would have to be a little patient. But I think you will slowly, hopefully, start seeing this stock get back to 1100, 1200 levels. And then you should revisit it, see where they are at in terms of earnings, etc., and whether all the dust has settled over their problems, and then decide whether you want to continue to stay invested. But for the moment, I think stay put in Inden Bank.
Okay, so that's the view on Inden Bank. Sharan, now coming to you, we already got Sharmila's view on BHEL. Now, this viewer has 500 shares of BHEL bought at a price of 267 rupees. They're a short-term trader, so they want to know how long will they have to wait to reach their price.
Anishka, I think looking at the chart, it's about to break down. Quite a bit of selling in the last 2 weeks. So if possible, I would suggest please keep a stop loss in the system of 244 in the short term. But in the longer term, again, the stock is trending with a higher high, higher low kind of pattern. So if you see a breakout about 267 or 270 odd levels, I think you can see a reversal in trend. Till then, currently I see levels of around 240, and at that time we can again review. But in the short term, I think it's about to break down. So if you're in profit or you have a strict stop loss, please put it in the system and accordingly trade.
All right, that was the last query of the day. We're completely timed out in this edition of Buy Now Sell Now. Sharan and Sharmila, thank you so much for taking the time out and joining us and answering all the questions for us. But with that, it's a wrap on this edition. Kanishka and I will take your leave. Thank you so much for tuning in. Don't go anywhere because markets at noon take the market action forward.